IT Pro TV, an easy, entertaining approach to online IT training. Stream over 2,000 hours of up-to-date, high-quality video content live and on demand. For a free 7-day trial and for a limited time, get 50% off a monthly membership for the lifetime of your active subscription. Visit itpro.tv/startup security and use the code SS50. Do you have a website, an external presence, employees, an office? Any of these things can be compromised and attacked. How are you defending these assets? Have you penetration tested these public assets? Start 2017 by taking a proactive approach to securing your vulnerable areas. Black Hills Information Security has been helping companies find their weaknesses since 2008. Email consulting@blackhillsinfosec.com and see how they can help you sleep better at night.
And I'm back. I would say we're back, except for it's really much more of a I'm back. So before we get into the news, one more announcement. I'd like to make 10th anniversary edition of Source Boston. 10th anniversary. That's one of those times when you feel old. 10th anniversary edition of Source Boston is being held this April, including training sessions held on April 24th to 25th. So that's coming up next Monday, Tuesday. Conference talks, April 26th, 27th, featuring awesome speakers from the security community. Events will take place in Boston at the Courtyard Marriott downtown. And Security Weekly listeners, if you haven't signed up yet, you get a $100 discount on either training or the conference passes. And if you use the discount code Security Weekly, all one word, you can visit sourceconference.com for more information. All right. So as usual, picked out a couple stories. I'll take a couple minutes to go through them, and there is some movement of the week and things worth talking about. So I'll try to take everybody through that. First one, there was a Babson College professor, and he said, look, there's one characteristic that makes for a successful entrepreneur. In fact, I'll ask the same question the way he does. What is it? Go ahead. You can shout it out now. It's funny if you're commuting. I think you should shout it louder. He said, most people get it wrong. It's interesting because what he says most people answer is not what I would answer. If I'd first thought about that, I don't even know anymore what I would answer because I'm much more fascinated with questions. So here's the thing. Most people say if you want to be successful as an entrepreneur, if you want to be successful at running a business, doing a startup, you have to be willing to take risks. And he says, yep, nope. But then he kind of parses it, right? So what he's really saying is you've got to be a calculated risk taker. Now, I thought this is interesting because we're obviously largely focused on security startups. And what do you do if you're in security? We're all about risk. We're all about the downsides of risk. And so the idea here is you want to take risks that are smart. You want to be calculated about the risk that you take, which really means you want to consistently look to minimize your risks. And so, of course, I love this because it's got questions. And you should ask things like, what are others doing wrong and what are others doing right? Now, that's actually, to me, the more important question. Everybody will tell you what you're doing wrong. They're happy to do it. And unfortunately, a lot of times we do that in security. It's really easy to point out all the things that didn't work, especially in hindsight. But I like looking at what other people do right. And then if you look at that from the idea of minimizing risk, what have other people done right? That reduces our risk. When you get that figured out, oh, you're definitely on the right track. It's got a couple other ideas here, and basically just says, don't think that you know everything, and always be looking at ways that you can minimize risk. You hear that a lot too. It's called de-risking. How do you de-risk it? And think about this. This is where my work's been a lot in the last couple of weeks. You're a startup, so you have to de-risk yourself to a potential client, but your value proposition also has to de-risk it for the client. You can win over somebody in your dream organization, or frankly, any organization early stage that's willing to help you get some traction. They have to go to somebody else. They're going to have to get another signature or buy-in or support or something. Think about how you can help them minimize the risk of working with you, and that you're going to find that you've got a lot more success. All right, 4 things you didn't think you would need when you scaled your business. So here's what caught my attention on this. And this might be something I come back because I'm really curious Paul's take on this as well. But a lot of times people think about, I got to figure out how to grow my business. This will be my biggest challenge. And I'll admit, over the last 15 years or so, there's times that I've thought about that. How do I scale? How quickly can I scale? And, as we talk to people, whether you're a products business, a services business, or some sort of a hybrid, there's a lot of questions there. And then you start running your business and you realize, yeah, that's actually not the biggest challenge. Now, here's what it lays out, our bigger challenges, especially as you start to scale. Different leadership. This one, we talk about this on the program. What got you where you are may not get you where you need to go. And that's part of the reason we start highlighting these changes in the leadership of startups. You could be great at that founding stage. Small team, forge an idea, put a lot of energy into it, get that seed round, maybe up to an A round. Now you've got to figure out how to scale, and you've got to scale at speed. That might not be your forte. That's okay. That might be somebody else's position. That might be a good opportunity for you to exit. But the point is, there's different stages and there's different parts of the company, and they sometimes, or I would actually argue, frequently need different leadership or different types of ways to do it. Human resources. It's interesting. I find that HR, you either love it or hate it. I haven't found anybody who's lukewarm or tepid on it. But the reality of it is a strong HR function pays dividends. You're working with people. We're working with people. I saw, I didn't put this in our thing here, but related to this, Johnson & Johnson, I think I tweeted this out. Johnson & Johnson, they're spending $100,000 per employer. Rather, they're willing to sell you a program to prevent burnout at $100,000 a clip. So here's my comment on it. They're not paying attention to the friction organizationally they're generating that creates burnout among people. That matters because we're talking here about when you're scaling, you're going to be adding people. That's no matter what you do. You're developing a product, you're creating a platform, you're offering a service. Yes, you're adding people. When you add people, you're going to add friction. And that means that you need to think about how you're going to handle that and how you're going to keep people happy and you're going to prevent them from burning out. Documented processes. You know what's out here? That's also an area of friction. You're growing, you need people to have a process. Now, here's the trick I've learned with documented processes. The process needs to have a couple things. It needs to work for the organization. So there's always a confusion between outputs and outcomes. An output is simply, did you check all the boxes? Did you fill out all the elements on the form? When you're looking for outcomes, that's the idea of the process. The process is supposed to drive that outcome and help you with consistency and elevate your performance. If it's not doing that, you didn't do a good job. That's going to come up later when we talk about Jeff Bezos' annual letter. And then metrics. I love this. How do you know if you're winning if you don't know the score? Now, I get it. Metrics are hard, right? And that's what I was talking about. Metrics are hard. Measurement is hard, but it's important. And we could go on and on with all these fantastic quotes about it, but the question is, what's important to you, and do you know if you're getting better or not? Now, what I've learned, too, is a lot of startup folks, they actually want to know what they need to do. How am I doing as a startup leader? How am I doing as your 5th hire, your 12th hire, your 20th hire? What's my future look like? How do I fit? How are you assessing my value or my worth to the company? So think about how you put some of those things together. And what's interesting is those are actually more challenging than necessarily figuring out how to scale. The good news is if you figure those out, you've made it a lot easier to scale. Another thing here that I thought was kind of cool was this idea on the art of capital allocation. So here's why I put this out there. And this is one of those, it's not exactly a startup article, but capital allocation is essentially how you translate your strategy into action. And the reason I got excited about this from our perspective is because what we're finding is there's a lot of organizations that they're keeping their capital on the sidelines. They're reluctant to spend the money. They're reluctant to invest it. They're not creating the value that the money can create. Although it seems nice to say, well, if I have my money in reserves, we're doing great, right? Depends on who you are and the stage of company you're at, but typically, no. And here's what they said. Our analysis shows that outperformers, companies in a top third of stock market valuation relative to their peers, so if you're in a publicly traded company, this becomes really important to you, they invest approximately 50% more in CapEx than their peers and achieve approximately 55% higher returns on assets and approximately 65% higher sales growth. Those are huge numbers. So CapEx is your capital expenditures. So that's putting money into structure. And it's putting money into things that allow you to grow or deliver better or to do those types of things. And so there's a whole bunch here that talks about how to pick the right projects, how to provide governance on it, how to look at it. If you're an early stage startup, here's what I look at in these. How do you help your customers achieve this better? This isn't an article that says if you're a startup, you need to go read this to help you run your startup better. You'll learn some things in it. But this is more about understanding the bigger picture of large publicly traded organizations. And if you're targeting them, can you help them do a piece of this better? Can you help them do a piece of this with less risk? If so, you're ahead of the curve. All right. Next story that I threw up in here, and I like this one for a different reason. So the title's The Myth of the Store of the Future. And it opens up talking about Target, which in the security world we talk a lot about because of their breach. And as a final warning, please stop telling me that the Target is an example of what can happen. Large companies can totally absorb a breach without any problem. But what we're focusing on here is that they opened up a store of the future, and they were testing a bunch of stuff out. And then they said, yeah, okay, that didn't work, and they shut it down. Now, here's why that matters. We're starting now to see a lot of companies that are the next generation technology. They are the solution of the future. And guess what? They're totally not working. They're losing market share. It sounds good. You make a splash. It gets good clickbait headlines. And then what? Now, here's what I liked about this article, and I think it kind of applies. So I'll quote, "Therein lies the problem with the store of the future terminology. The initiative becomes a self-fulfilling prophecy. And the real progress around the new store experience is always going to be a few years down the line, out of tangible reach, but talked about often in hypotheticals." Yep. So here's the thing. My takeaway from this, don't dub whatever you've done as the future, the next, because that sounds like you're cutting edge. That sounds like and people will say, I love it. And you know when they're ready to buy? In the future, at some point. When it's not so hypothetical, when it's battle tested. What would I do instead? Solve problems. Isolate the problem. I've been out. We talked about it with Paul, and a lot of what I've been focusing on is this value prop audit. And I've expanded a little bit. It's now 18 points. So there's 3 points, or 3 sections, 9 points, intensely focused on value prop. The problem that you solve, the value you create solving that problem, and the impact that the solution has. And what we're measuring at some level is friction, because if you have too much friction solving the problem, you basically destroy your value. And then we have 3 that look at the category, your delivery of the method, and whether or not you're introducing another type of friction, right, and a lack of consistency that something like Straight Talk could correct for. Go focus on that. Go focus on being able to tell me or anybody else the problem that you solve. Be able to ask it in a question where my brain will lock onto it, especially if I have that problem, and give me enough convincing value shortly that I say, that's cool. How do you do that? What's up? That's it. That's all you want. You do that, you're in great shape. Don't be the next generation. Don't be the store of the future. Don't tell me how your version 7.2.6, whatever, because it doesn't really happen. Something else that we've been talking about on this program from time to time, future innovation outside of Silicon Valley. So Steve Case, if you don't know, Steve Case for a while now, he's got a firm called Revolution. And he has, well, I'm reading it right here. He's logged 6,000 miles, visited 26 cities in what we call flyover country, including places like Omaha, Minneapolis, Des Moines, Detroit. And so basically what he's learned, and he calls it the Rise of the Rest bus tour, and living in one of those areas, if he didn't come through here, I think he went to Wilmington, and or he's been in Charleston, and or both, and he goes around to these types of places, and what he's basically saying is he keeps seeing momentum in every community that he's in. There's more focus on startups. There's more recognition of the roles that they play in creating jobs. I've seen that here in Myrtle Beach. And I'm in discussions with other places, and we'll bring them onto the show when it makes sense. But the short answer is, yeah, I'm seeing the same thing. But everybody there has the same problem. They can't raise capital because they're not in the bubble. But here's what I'll tell you. People that are in Silicon Valley and people that are in these larger coastal centers, they're also looking at it saying, yeah, I don't think our future is just staying here in Silicon Valley. I think we need to start thinking about how do we reach these people. Now, there's going to be a signal to noise problem. because that means now I've got a lot of smart people distributed around the world, distributed into pockets and cities. We just talked with Roger Corville. It's easier than ever to be able to connect ourselves virtually and pay some level of attention or not. And that's some of the stuff you got to think about. So the good news is, if you're not in one of these major city centers, but you've got a great idea, don't let that discourage you. Go make it happen. And you might find that there's people in your city, that there's people that are not far from you that would help you, that want to be part of it, that will support you, that you guys can do it together. You better start thinking now about how you're going to rise up, about how you're going to capture that attention. Whether you need funding or not is a separate issue, because we're also watching a lot of angel investors try to figure that out. So your early stage stuff is probably going to get there. And it may mean that you think about early stage in terms of who can help you get to that next level, to that next stage. But if that's the path you go, that's what you need to start thinking about. But what Steve K says is long time, it's going to get there. And he thinks that over the next 5 years, we're going to see that start to ease itself out. I actually tend to agree. I think in some areas it'll take longer, but I think I'm already seeing signs of that flow changing, and I'm seeing signs of people thinking about this differently and willing to go meet people where they're at instead of expecting them to be in a particular place. And so I think that works in your favor. But as always, love your comments or feedback on it. And today you're pretty much getting Michael's thoughts on it, not just Paul's. So chime in, and if you've been screaming at the computer or at the radio or at your headphones or at your passengers if you're commuting, cool. Well, good for you. And then let me know what you thought. All right, so the startup and the security notes of interest, things that I thought were funny or worth taking a look at. Jeff Bezos' annual letter. This already made the rounds on Twitter. So it's likely that you saw this here. What's kind of neat is he always puts his 1997 letter in there, as well as this one, and he talks about day one versus day two. And he basically said if you've got a day one, then your day two is basically the start of your decline. So for him, it's always day one. And he kind of addressed that in this letter. I think it's a great read, and I think it's worth taking a look at. And what he basically said, though, is that so the idea is you'll get to a day two. Now, you might enjoy a decade or decades of day two before your decline, but he doesn't want that. He's very obsessed. People are writing some absolutely flattering things about him, which is great, because if you go back 20 years, they weren't. So it shows you that persistence and that level of focus and obsession really starts to pay off. And I think Amazon continues to do some really amazing, innovative stuff. So he said, all right, here's your starter pack. Here's the things you need if you want to keep yourself in day one. You've got to have customer obsession, skeptical view of proxies, eager adoption of external trends, and high velocity decision making. Now, what's interesting on this for me is the one I focused right in on is high velocity decision making. When we go out and talk to folks, I find most people tell me one of the biggest challenges they have is they can't get decisions made. They struggle to make decisions, and if they need other people involved in the process, they struggle to get a decision. Or how about this one? I call it the boomerang or the torpedo. You think on Tuesday you've got a decision, and by Friday you got the email, the phone call, or the knock on your door that we've changed our mind. But wait, I thought we had no decision, it's gone. So he's saying, look, you got to get past that. But the one that I want to focus on for a second is a skeptical view of proxies. And he said a common example is process as proxy. Now, some of you know I love process, and I also love to hate process, right? So I like it when it works, and I like it when it doesn't, so we can deconstruct it, fix it. That's essentially what Jeff said, significantly more artfully than I do. And a number of you sent that to me, and thank you. It was a good read, and if you go take a look at it, he lays it out pretty well, how to look at it and think about it differently, and I think you'll benefit from that. Some of the news in terms of stuff happening, SoftBank, $16.5 million Series C investment into Dome 9. So they are multi-platform firewall management as a service for cloud and hosted virtual private servers. So far, 4 rounds, they've raised about $29 million. What you'll see in the notes now is when I see stories that trigger this, I'll throw the story in, and I'll give you the profile both on Owlery and Crunchbase, so that way you can compare them. Each one has the ability for you to help and make it better, and it's kind of neat. What I think's interesting about this is a couple of years ago, we started talking to people about how to communicate differently because of the cloud. And one of the things we would usually say is, you may not have a firewall in the cloud, but you will have a firewall-like function. So what we started talking about was translating functionality into understanding. And what it looks like here is that either they've done that or they figured out how to help you actually get a firewall in the cloud. So something worth taking a look at. One that I talked to, and I threw a link to my previous story here, CyberGRX, $20 million Series B. That's big dollars. I mean, for a Series B, that's fantastic. Now, they're part of this emerging focus on third-party cyber risk management. So they're looking at third-party risk, and they're specifically looking at third-party cyber risk. And what they launched recently, and what this money helps them do, is they've launched essentially an exchange or a marketplace where you can go on it and you can learn more about it. So the reason I put them in here is because I think this is going to be worth watching. This is a space that's starting to heat up. We did rapid ratings, right? We talked to James Gellert a couple weeks ago. A lot of people now are looking at this to say, how do we quantify risk? How do you prioritize risk? How do you assess the risk of your third parties or your fourth parties? I'm doing a series on cyber insurance, and I'm realizing that most of you, when we say cyber insurance, you think cyber liability. And that matters. By the way, most of your third parties are not covered under your standard liability policies. But there's more now, and there's a lot more happening around it. So it's just one of those things. Keep involved with it. And if you've used CyberGRX or you want to, let me know. Let me know what your experience has been like. Talk to us about it. Tell us and tell us how you would use it, or if you would use it. Especially if you're a consumer of this, you're an enterprise security leader, and you're looking at this and saying, "Whoa, I wonder how that would fit." Let's talk. I'd love to chat with you about it, or we can talk with you on the program and see how that works. Check Recipient raised $2.7 million, so they've got about $3 million in funding. What's interesting here is they're an email security platform that helps you prevent sending confidential information to the wrong person. We have, over the years, not necessarily in this program per se, but on Security Weekly and other places, we have seen some pretty large breaches and minimally some privacy gaffes and other embarrassments because you sent it to the wrong person. Because a lot of times we have autocomplete. So you start typing the name, it pops something up, you press send, and then you go, I sent it to the wrong person. So it's interesting to me that this is a big enough problem that companies are willing to buy a solution to prevent that from happening. And they raised another round. So I think I'm mostly curious about it, and I'm curious if you would do it. All right, last one for the week. Chris Young was named the CEO at McAfee. All right, so McAfee gets bought by Intel, gets spun back out, and now they're kind of standing themselves back up and finding their way. So the former GM of the Intel Security Group, Chris Young, was named the CEO. I just thought that was interesting because, as I said, you need different types of leadership for different stages, and I think it's going to just be interesting to watch how he does, and to watch what that means for McAfee. They've always been a player, and as we continue to see innovation in the space, they're obviously well capitalized. They've got a brand name. Now let's see what this new CEO does with it. Now, as I was putting these notes together, I got an update from Owlery, and it says the Owlery community has spoken. Chris Young's rating as CEO of McAfee is up 11 points. And then it says McAfee CEO Christopher Young's overall approval rating is up 11 points after recent input from the Owlery community. The CEO's rating now stands at 54 on a 100-point scale. In comparison, FireEye's Kevin Mandia has a CEO rating of 48, while Greg Clark at Symantec has a rating of 55. Christopher Young's rating represents the opinion of 24 members of the Owlery community, so I appreciate that's a small sample. However, I took it as a good indicator, and that's one of the things that's nice about Owlery. And if you follow these links and you have insight on these companies, you can help update it, you can help validate it, you can help improve it, and that's going to help our whole ecosystem. And everybody absolutely appreciates that, and I do too. In terms of the journey, we like to do our journey updates from time to time. I tell you, for me, things are clicking, and I'm loving it. And some of you have taken me up on the offer for the value prop audit, and I'm now calling it the straight talk on value prop audit. Happy to do that. I'm actually putting a resource together around that too. One of the things that I was trying to figure out was, because I work with boards and executives, and I work with startups, and I work with vendors, and I still work in the enterprise space. But think about it. Anytime you're at risk of getting stuck, and that means that the value that you work to capture is going to go away, you're going to lose trust, you're going to burn out or burn other people out. It's a perfect opportunity to bring me in. Turns out value prop audit, a lot of times in the business world, we call that a business case. You may call it something different, but what you're really doing is saying, what problem can you solve? What value do you create solving it? And what's the impact of the solution? And how is that going to impact my value overall? And that's working out really well. That's what's interesting is this week I've already had a couple of requests to do some workshops on it. So I've got two versions. I've got an executive workshop. If you already have a value prop, you need people together, or I've got now one that actually teaches you the basics of how to build it. And the beauty is it's a great primer into straight talk and even the straight talk simple start. So all my stuff, like we talk a lot on this program about as a startup, can you be narrow and focused and provide value but still see a pathway to growth? I have the Straight Talk Audit. I've got some resources on it. If you need help developing your value prop, I can help you. And if you need help figuring out where your alignment and where your friction is, I can help you with that. They work together hand in hand. And so for me, things have been fantastic. Got some writing up this week, and things are coming together nicely. I know they are for Paul as well, and he got a little time off. Hopefully, it's been some insight for you this week as well. And I'll be back next week. More ideas, more stories, another great interview. And I'll see you then.